Dan, it's great to have you here today. For those joining us, I'm Gabriella Koenig. I'm the Director of Marketing of North America at Payhawk. And joining us today, we have Dan Osburn. He is the Chief Payments Officer at Payhawk, where he leads banking, cards, compliance operations, and several of the core functions that power Payhawk's global financial infrastructure. He also serves on the board of Payhawk's regulated financial entities in the UK and Lithuania. Before joining Payhawk, Dan helped scale one of the most important companies in modern card infrastructure, Marqeta. He scaled it from $20 million valuation to a $16 billion IPO. His career has focused on building the underlying systems that make modern financial products possible. Dan, thanks so much for joining us today.
Very happy to be here, Gabby. Thanks a lot.
So for today, we're going to talk about how AI is starting to change the way finance teams actually operate. I know that sounds pretty lofty, and I'm perhaps getting ahead of myself here. So before we dive into that, I think it's really important that our audience actually understands the current state that a lot of finance teams are in. So when you look around, most finance teams today are still managing spend after the fact, after the purchase, after the receipt arrives, after the code happens. Why has finance historically been forced to operate that way?
I think if you look at how corporate card data flows through most companies, it's almost designed to make finance operate after the fact. To take an example, let's say an employee swipes a card on Monday. The finance team might not see that transaction until Wednesday or even Thursday when the bank feed updates. A few days later, they're still waiting for the receipt. Then at the end of the month, someone on the team has to decide how to code the expense and whether it followed policy. Now multiply that by thousands of transactions. Finance ends up spending an enormous amount of time chasing documentation, fixing coding, and reconciling spend weeks after it happened. Industry benchmarks show finance teams spend on average 35 hours a month on reconciliation, which adds up to roughly 420 hours per year. For a typical team of 5 to 10 people, reconciliation consumes almost 33% of the entire team's time. That's why finance teams end up operating after the fact. When a third of the accounting team's time is spent reconciling transactions that happened weeks earlier, the function naturally becomes focused on cleaning up the past rather than seeing what's happening in the moment.
If finance has historically been forced to operate in hindsight because of delayed data, what changes when that information starts showing up in real time?
When that information starts showing up in real time, the entire operating model of finance changes. Instead of waiting until the end of the month to reconstruct what happened, the system starts capturing the context of spend as it occurs. A card gets swiped, the transaction appears instantly, the receipt is collected right away, and the system can begin categorizing the expense and checking it against policy immediately. That's where AI starts to matter. Historically, all of those tasks, chasing receipts, coding expenses, checking policies, following up with approvers, fell on the finance team. But now those workflows can be handled by AI agents that operate inside the finance system itself. Through Payhawk, companies can access an AI-powered finance office on top of the corporate cards they already use. For example, our financial controller agent can automatically chase missing receipts, validate expense data, and flag anomalies. Our payment agent resolves card issues and answers payment questions instantly. Payhawk's procurement agent can guide employees through compliant purchasing requests, and with our newest fetch agent, the AI can securely log into supplier portals, retrieve invoices and billing documents, code them automatically, and submit them directly into the finance workflow. So the shift isn't just that finance sees the data sooner, it's that a lot of the operational work that used to happen weeks later is handled continuously in the background.
What you described is almost like every finance professional gets their own digital teammate. What do you mean by that?
When most people hear AI in finance, they think about automation, taking a task that a person used to do and having software do it faster. That is part of it, but what's emerging now is something much more powerful. Instead of just automating a single step, AI agents can take ownership of an entire workflow. They can monitor transactions, gather missing information, apply policies, and resolve routine issues continuously in the background. So rather than finance teams logging into multiple systems to chase receipts, review transactions, and follow up with employees, those agents are handling that operational work as it happens. That's what we describe as a digital teammate. Every controller, AP manager, or accountant effectively has an office of AI agents working alongside them. Teammates that never forget to follow up, never miss a policy check, and can process thousands of transactions almost instantaneously. The result is that finance professionals spend far less time on administrative cleanup and far more time on the work they are actually hired to do, analyzing the numbers, advising the business, and helping leadership make good decisions.
Okay, so let's make that concrete. If every finance role had agents supporting them, what kind of work would those agents actually handle day to day?
Sure, let's make it concrete. So if every finance role had agents supporting them, each agent essentially takes ownership of a category of operational work that used to consume hours of a finance team's day. For example, Payhawk's financial controller agent handles the continuous cleanup work that normally piles up at month end. It collects receipts as transactions happen, validates expense data, applies coding, and flags anomalies automatically. Instead of controllers chasing employees and reconciling transactions weeks later, the system is maintaining clean books in real time. Companies can achieve 99.7% zero-touch, successfully reconcile transactions in their ERP. This dramatically reduces the time spent on manual reconciliation. Work that historically consumed on average of 420 hours per year costs companies on average $18K to $27K annually just in reconciliation labor. The procurement agent supports the front end of spend. When an employee wants to make a purchase, the agent guides them through the request, checks policies, and routes approvals automatically. That's why companies see about 70% faster intake to pay cycles, because the administrative coordination that normally slows procurement down is handled in the background. Then there's the Payhawk payment agent, which acts like the first line of support for employees using company cards. If someone has a declined transaction, a question about a charge, or needs help resolving a payment issue, the agent can answer instantly or resolve the problem without finance needing to step in. That's one reason our customers see about 40% fewer support tickets coming into finance. You also have agents focused on operational workflows like travel and expense. When someone books a trip, the system captures the information, collects receipts, prepares the expense automatically, and applies the right coding and policies. That's why companies see about 90 minutes saved per book trip, and expense submissions happen twice as fast, because the system is assembling most of that report automatically. Finally, my personal favorite, our fetch agent can even retrieve documents automatically that normally require manual work. It can securely log into vendor portals, download invoices or billing records, extract the data, and push those documents directly into the finance workflow. So when you step back, the idea of a digital teammate becomes very literal. Each of these agents is responsible for a specific category of operational work, running continuously in the background so the finance team isn't spending their day chasing receipts, answering routine questions, or collecting invoices. Instead, those workflows happen automatically, and finance can focus on the decisions that actually move the business forward.
So instead of finance chasing documentation after the transaction, the system is capturing the information as spend happens. How does that change the way finance teams actually operate?
I would say it fundamentally shifts finance from cleanup to oversight. When the system captures receipts, coding, and policy checks as the transaction happens, finance teams no longer spend weeks chasing documentation or fixing errors at month end. The books are effectively being maintained continuously. That means controllers and accounting teams spend far less time on administrative follow-up and reconciliation, and far more time reviewing exceptions, analyzing spend, and advising the business. So instead of reconstructing what happened last month, finance can operate in the present with cleaner data, fewer surprises, and a much clearer view of where the business is actually spending money.
Finance teams today are being asked to operate faster and leaner. You've said this doesn't replace finance professionals, it multiplies them. What does that multiplication actually look like inside a finance team?
What multiplication really means is that each finance professional can operate at a much faster pace because of a lot of the operational work being handled by the agents in the background. For example, the average 200-person company spends over 330 hours per year processing expense reports. Instead of spending hours chasing receipts or recoding expenses, those workflows are automated. Document capture runs at 93% accuracy, expense submissions happen over 60% faster, approvals over 61% faster, and finance teams see around 40% fewer support tickets. You also see it in larger workflows. Procurement cycles move 70% faster from intake to pay, and travel expenses that used to take time to assemble now save employees almost 90 minutes per book trip. So the multiplication isn't about replacing people. It's about removing the administrative friction that used to consume the finance team day. When that work happens automatically, a controller, AP manager, or accounting team can focus on analysis, controls, and advising the business instead of processing transactions.
For a CFO listening to this, what's the real mindset shift? What do they need to start thinking about differently when AI agents become part of their finance team?
I'd say the real mindset shift for a CFO is moving from thinking about finance as a team that processes transactions to thinking about finance as a team that oversees financial operations in real time. For decades, finance organizations have been structured around manual workflows, collecting receipts, reconciling transactions, reviewing reports weeks after the fact. When AI becomes part of the team, that operational work runs continuously in the background, on top of the corporate cards already in use. So the shift for finance leaders is this. Instead of building teams around processing transactions, you start building teams around oversight, analysis, and decision-making, because the operational work is being handled in real time.
Dan, this has been incredibly insightful. I think the big takeaway is that finance teams don't have to operate in hindsight anymore. With real-time data and AI agents handling the operational work, finance teams can move from chasing receipts and reconciling the past to overseeing financial operations as they happen. And importantly, companies can do that while keeping the card programs that already work for their business. Thank you so much for taking the time to share your perspective today.
Absolutely, Gabby. I think you've got it exactly right. My pleasure, and thank you very much.